Artificial intelligence stocks have popped this year. Look at some of this year's most exceptional gainers. Chipmaker NVIDIA just became the 7th trillion-dollar company in history. The stock is up 233%. But that's just one high-profile example. C3 AI is up 352% this year. Opera, 374%. Duos Technology Group, 278%. Big Bear AI stock rose 846% in less than 2 months. In fact, 5 tech stocks with connections to AI have single-handedly kept the S&P 500 in bull market territory. Alphabet, which is Google, Microsoft, NVIDIA, Apple, and Meta. These same 5 stocks propelled the Nasdaq to the best first half of its 52-year history. With eye-popping gains like that, you might think the AI stock boom is behind us. But we think it's just getting started. In fact, there is a simple 3-step pattern to every single technology boom in history, from the automobile to the internet, and artificial intelligence is following the script to a T. AI just moved from step 1 to step 2. And that's what is really exciting, because it's the next step, when tech stocks move from step 2 to step 3, where things start to get very interesting. NVIDIA was just the beginning. I believe this last step could usher in the next wave of AI stocks. And although we can't guarantee anything like NVIDIA or the other early AI winners, we believe some of these AI stocks have potential. Check out some extraordinary examples of what has happened when a market starts moving from step 2 to step 3. Take the internet, for instance. It stayed in step 1 from about 1968 until the early 90s. Then, by the mid-90s, it had moved to step 2. That's usually the shortest step. By 1997, the internet had moved quickly into step 3. That's when owning personal computers progressed from a luxury to a necessity. More than 35% of U.S. households now had one. And that's when stocks took off. Check out some of the biggest gainers from the internet boom of the 90s. Dell Computers soared 91,863% that decade. America Online jumped 70,626%. EMC Corp shot up 74,577%, and Microsoft jumped 9,619%. Obviously, not every tech stock in the 90s saw gains like these blue chips. Plenty of them went belly up. So, it's important to do your research before investing in a new market opportunity. Streaming video services followed a similar pattern. Step 1 lasted nearly a decade, and stocks barely budged, as you can see from Netflix's chart for this period. But by 2011, video streaming had jumped to step 2, and it didn't stay there long. The transition from step 2 to step 3 was even shorter than the internet, and Netflix stock soared. It rose 4,180%. Netflix's success led a parade of companies into the streaming sector, like Roku, which went up 623% less than 3 years after it went public in 2017. Alphabet, Google's parent company, has shot up 1,174% since it got involved with streaming. And Amazon soared 1,968%. Smartphones are another great example. Their 3-step transition happened around the same time as Netflix. It launched the beginning of a boom in tech stocks in general. But smartphone-focused companies saw some of the biggest wins as the technology moved into step 3. Broadcom stock jumped as much as 1,950%. The iPhone launch sent Apple stock on a 1,735% ride. Towers had to be constructed to expand the networks, and American Tower shares gained 239%. A competitor, Crown Castle, saw its own shares jump 216%. Nokia, one of the worldwide leaders in wireless devices, saw its shares spike 436%. And Infinera, another device maker, returned investors 367%. All once the technology jumped from step 2 to step 3. Right now, artificial intelligence has reached step 2. And that's why I recorded this message, because advances in technology are moving even faster today. Streaming and smartphones moved from step 2 to step 3 much quicker than the internet. And the internet was much quicker than old tech, like TVs or automobiles. Our information suggests AI's move from step 2 to step 3 could be even more rapid. If you missed out on the early rise in AI stocks like Nvidia, don't worry. We believe there's still a chance for you to get into AI before it moves to step 3. As you're about to see, AI is moving faster than anything else before it. Have you heard of ChatGPT? ChatGPT is an app you can use to interact with what's called generative AI. Generative AI is capable of processing massive chunks of data in a split second, and it can learn from its interactions. ChatGPT had tech enthusiasts geeking out earlier this year. You can ask it to research pretty much anything. It's capable of writing reports, novels, poetry. It even passed the bar in the medical exam for doctors. ChatGPT is so popular, it became the fastest app to reach 100 million downloads. And it isn't even close. It took 16 years for mobile phones and 7 years for the internet. But ChatGPT added 100 million users in just 2 months, 48 times faster than the internet, and 96 times faster than mobile phones. But here's where we see most investors making a huge mistake. They've made ChatGPT out to be more than it is. They've misread ChatGPT as a move into step 3 of the AI script. That's why a lot of people think they've missed the AI boom. But we think ChatGPT was just step 1. And despite what Nvidia has done this year, we believe the AI boom is just getting started. After all, 100 million users may sound like a lot, but there's more than 335 million people in the United States and 8 billion people worldwide. Currently, over 5 billion people use the internet. Over 1 billion smartphones were sold last year alone. AI's worldwide usage currently pales in comparison. And while Microsoft paid $10 billion to acquire a stake in ChatGPT's creator, OpenAI, ChatGPT is a mostly free tool and hardly brings in any revenue. But that's all about to change thanks to the speed at which AI learns and advances. We could see a move into step 3 by the end of this year. The 3-step script for technology investing goes like this. Step 1 is the early adoption phase, where the tech is available only to a limited number of enthusiasts. You may get some interest in the news, and a couple speculative stocks may shoot up in anticipation. But at this stage, the tech has limited uses and limited influence on society. Let's take the internet's adoption curve, for example. The internet was available as DARPA for a few people as early as the late 60s. But all the way through the early 90s was mostly theory, used by nerds and computer scientists, lucky enough to gain access to one of the limited internet portals. Investments were few and far between. The niche industry flew under the radar. Most technologies stay mired in this period. They never reach the second step. Step 2 is when a technology has a spark or impetus that vaults it into public awareness briefly. It's a moment where the number of people familiar with and able to use that technology has recently exploded. But the application of the technology is still not important or valuable enough for it to be truly mainstream. With the internet, by the early to mid-90s, more people were buying home PCs and connecting to the World Wide Web. The internet has gained general public awareness. But the overall numbers were still small. Most Americans had still never used the internet. It's only in step 3, mainstream adoption, when things start to get truly exciting. And that's because you only reach step 3 when you cross a tipping point numbers-wise. Internet-connected households reached 25% in 1998. And history has shown that when a certain percentage of users hits somewhere between 25 and 50%, that's when profits start to grow exponentially. And that was the start of step 3 for the internet. But most investors know it as the dot-com bubble. The NASDAQ soared 579% before the bubble eventually burst. Only the wisest or luckiest investors who exited before the bubble burst were able to profit. When it comes to AI, the concept has been around since the 1960s, and small advances have happened over the last decade, barely noticeable to the public. But the technology was still squarely in step 1, until ChatGPT came along. Now, AI has moved into the general consciousness, but only 14% of Americans have actually used it. We think that is about to change in the next few months. But instead of individual Americans leading the way, it will be businesses who vault AI to the last step. And it's already beginning. AI could generate $4 trillion every year. You see, while artificial intelligence will most certainly affect our daily lives, it's going to have far more influence in the corporate world. AI's ability to sift through reams of data and understand it is a gold mine for all sorts of industries. When AI moves to step 3, it won't be because of one company or specific use. Instead, unique use cases for generative AI are going to pop up in thousands of industries, creating massive disruptions. PricewaterhouseCoopers estimates that AI will generate $15.7 trillion by 2030. That's more than the combined economies of Japan, Germany, the UK, and France. But a McKinsey study found that generative AI could add $4 trillion per year to the bottom line of global businesses. If industry experts like PricewaterhouseCoopers and McKinsey are correct, we predict a lift to the share price of AI innovators and the companies who use AI to improve their bottom line. As Bank of America strategists were quoted recently, AI is the new electricity. It's about to revolutionize everything. And it's the AI companies who disrupt the biggest industries that will get the most attention. This is the next wave of AI stocks I've been telling you about.